On this video, I'll be talking about divergence. So, what is divergence? Divergence is a visual discrepancy. What do I mean by this visual discrepancy? Like we all know, they are technical indicators that we know. They are price loving, like they are price action loving. They have affinity to price action, so they move with the price action. So that point where the indicator, this technical indicator, fails to record the movement of the price action is what we call the divergence, is where we call the divergence. All right, so at that point where the price action is making a higher high and in the indicator is making a higher low, all right, and we are getting it. So it's making a higher low, that's called a divergence. So um before we go ahead, I'll have to tell you the different types of divergences. We have the hidden divergence and the hidden divergence or the negative divergence, and we have the positive divergence. This positive divergence, we have two types of positive divergence: the positive bullish divergence and the positive bearish divergence. The positive bullish divergence indicates the reversal of a downtrend, to an uptrend, while the positive bearish divergence indicates the reversal of an uptrend into a downtrend. Then the function of the negative divergence is it indicates the continuation of a trend. We have two types of hidden divergence. We have the bearish hidden divergence and the bullish hidden divergence. So this bearish hidden divergence, it indicates the continuation of a downtrend, while the negative bullish divergence, it indicates the continuation of an uptrend. Then we have how do we now the question now is, how do we spot these divergences? Well, like I said, you have to it's a point at which the technical indicator fails to record or fails to take note of the price action. Okay, so these divergences, we have we have different indicators that that notes these divergences. We can use the RSI, the CCI, the stochastic, the MACD. We have so many indicators that indicates the divergence. So now I'm going to actually show us how to use the stochastic and the MACD to indicate divergence. So normally what I use the stochastic to indicate the reversals, which is the hidden divergences in the trend, while the MACD, I use the MACD to indicate to spot the divergences of the positive divergence. Okay, so the stochastic points out the hidden divergences, while the MACD helps me point out the positive divergences. So now, how do we know the positive divergence and the negative divergence? Okay, so now using the stochastic, the first one, which is, let's locate this negative divergence. The stochastic which indicates negative divergence, I will say that here you see this point, this line, this trend line that I drew is showing where there's a higher low and a lower high. You see, so now there's a divergence in this place. It's trying to tell you that the market will keep on going down until, you see, this MACD is showing us that it will continue going down because there's been a divergence here. All right, so this is a negative divergence, that is a continuation of the trend. So now negative divergence, this is another negative divergence. See, this is another negative divergence. It showed the continuation of the trend. You see, just like I said, the continuation of the trend. Let me see if there's another negative divergence I marked. Okay, I failed to mark this negative divergence. Okay, let me mark it so it's plain. See, there's a negative divergence right in this spot. So yeah, there's a negative divergence. So looking at this indicator, we will see that here there's a lower low and there's a lower low, a higher low. Okay, a lower low and a higher low. So if we look at it, we'll see it. You see it here, here. So that is a negative divergence. Alright, that is a negative divergence. Oh my god, sorry about that. That is a negative divergence. So alright, that is a negative divergence of so that is a negative divergence. You can actually easily spot it right there. This is a negative divergence. Okay, so now that's a negative, that it shows the continuation of the trend. Same thing here, it shows the continuation of the trend, a negative divergence. So let me see if there's another one. Okay, there's still another one here. From here, if you check it right here, see a lower low and a higher low. See, negative divergence. I have to mark it so we know. You see, so now it showed the continuation of the trend. All right, so let's go to negative bullish divergence. See here, this is a negative bullish divergence. It shows the continuation of a bullish trend, while the negative divergence shows the continuation of a bearish trend. You see, so the negative bullish divergence shows the continuation of a bullish trend, while the positive negative divergence shows the continuation of a bearish trend. So this here is an example of a bullish negative divergence. You see it, so that is an example of a negative bullish divergence. So now let's enter the positive divergence. This is how we spot the positive. We use the MACD. See, the downtrend reversed to an uptrend. At a certain level, it fell back again. Right? It fell back again. See here, a positive divergence, a bullish, a bearish, um, a positive bullish divergence. This is a positive bullish divergence. You see that? This is the divergence. It indicates a buy signal. A buy signal. The bullish divergence indicates a buy signal. You see? This is one here. This is supposed to be another pointer here. See? It's going to be another pointer here. And the color to green. Green. Right. So yeah, this is another one. This is another one. A bullish divergence. See that? Bullish divergence. See that? Bullish divergence. Oh, sorry. This is a bullish hidden divergence. Sorry about that. So with all these places we just observed now, we can actually fish out different divergences in a trend. So with this, I hope that we can be able to spot divergences in a trade. Okay, wherever you see the visual discrepancy where the indicator is lagging and the price action is spiking, or the price action is falling and the indicator is rising, that's a divergence. Just all you just need is a confirmation, and then you place your trade, and that's it. It will go in the direction. As long as there is a divergence, you have nothing to worry about. It's going to work in your favor. That's one thing about divergence. Okay.